Welcome everyone to Vested Interest. This is Shane back for today's stock pick of the day video. It is December 12th. This is Thursday, so this will be the last one of the week. We are going to take a look at one in my portfolio, Lyondell Basell, ticker LYB. This is out of the materials sector. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever we put out any new content. I do these stock pick of the day videos Monday through Thursday whenever the market is open. We look at a stock that's pulled back on the day to see if it's presenting any value, like Lyondell Basell today. I also do a portfolio update review every Sunday morning where you see everything I'm buying, everything I'm selling. If I do make sales, there's not a lot of them, but from time to time I do make some sales out of the portfolio. Any options I'm in for the week and dividends received, we go over all that. Full transparency on this channel. I want you to see what I'm doing so that you can understand how the markets move in a real portfolio. And for those of you who are able, there is the thanks button down below. If you click that, there are several tiers for those of you who'd like to buy me a cup of coffee. Really appreciate those of you who can do that. Understand those of you who can't. Times are tough for everyone. And a special thank you to the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is how we'll be going through the video. The criteria I've set up here, you can read through this. Must meet 5 of 8 to make it onto my watch list. Since this is a company already in my portfolio, this will be a quick back check to see if this one is still meeting the initial criteria I set up, or if I should be worried and do more of a deep dive into the financials. Just because it does meet 5 of 8, if it was a company that wasn't in my portfolio, that means it makes it on my watch list. Then I do more of a deep dive into the financials of the company. So check out Lyondell Basell on their homepage. That's where I pulled this information from. That's www.lyondellbasell.com, www.lyondellbasell.com. That is their homepage where I pulled this information from. Again, www.lyondellbasell.com. About us, we are Lyondell Basell, a leader in the global chemical industry, creating solutions for everyday sustainable living through advanced technology and focused investments. We are enabling a circular and low carbon economy. Well, that really doesn't tell me a whole lot of what they do. So I pulled some snippets from their history here, going back to 1953 to 1954 here. Predecessor company scientists Carl Ziegler and Giulio Natta make breakthrough discoveries in the creation of polyethylene. So that's one of their products, polyethylene, PE, and polypropylene, PE. PE and PP resins are used today to make numerous products, including automobile parts, surgical gowns, children's toys, wind turbines, and water pipes. They were jointly awarded the Nobel Prize in Chemistry in 1963, so that's back in the 50s and up to the 60s when they got the Nobel Prize. And this was their last report out for their history. 2018, Lyondell Basell completed the acquisition of A. Schulman Inc., a leading global supplier of high-performance plastic compounds, right? So there you go. Some of the industries that they're in, again, automobile parts, surgical gowns, children's toys, wind turbines, water pipes, and then what are they doing over here? Plastic compounds. So think plastic bottles, anything made of plastic, right? Plastic composites and powders. The acquisition more than doubled Lyondell Basell's existing compounding businesses and broadened the company's reach into growing high-margin markets such as automotive, construction materials. There's more industries that they impact: construction materials, electronics goods, right? Probably like circuit boards, stuff like that, and packaging. Lyondell Basell marked a significant milestone in the company by breaking ground on the largest propylene oxide and tertiary butyl alcohol (POTBA) plant in the world. The project is the single largest capital investment that either Lyondell Basell or its predecessor companies have ever embarked on. So they are still reaching out and expanding into other industries, but primarily their bread and butter is the plastic production, right? And the polypropylene, polyethylene, I mean. And again, you want to know more about them, check them out, www.lyondellbasell.com. Now, the reason we are taking a look at them, down 0.37% on the day, we are talking about Lyondell Basell Industry, ticker LYB, again, out of the materials sector, closed out the day at $76.17, 52-week range as low as $75.98, as high as $107.02. They are right up against their 52-week low currently. Market cap of $24.737 billion, a beta of 1.06. They are more volatile than the overall market, and you're going to notice that this text here looks a little bit different than the rest. That is because a lot of these numbers were not reported out by Yahoo Finance, where I pulled this information from. So I had to go to stockanalysis.com. Another reason why I recommend more than one source. In this instance, I had to go to my second source to be able to get some of the information I needed, even to do the video. Again, a beta of 1.06, so more volatile than the overall market. Price to earnings PE ratio pretty low at $11.60. Their forward PE was actually even lower than that. EPS, earnings per share, sitting at $6.57 per share. Earnings date wasn't listed. Forward dividend, $5.36 on the year. That's a 7.04% dividend yield currently. Yahoo Finance had it at 7.01 actually at another slot. They didn't give the ex-dividend date, but that's over here, December 2nd. We just passed that. And it looks like they're going to pay out, or they did pay out on the 9th. And I believe I did get my dividend. So you will get the dividend, the next one, in a few months. If you were to buy them now, though, you're going to have to wait. Now, I want to look at dividend yield theory to see if this one is presenting any undervaluation. To do that, we compare their current dividend yield, right, or over here where it says forward, 7.01, to their 5-year dividend yield average, 5.22. Since the number is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. Payout ratio, I like under 75%. They're actually up there a little bit, 78.60%. So that's a little bit above where I'd like to see them. I'd like this to be under 75, preferably even lower than that. But it is starting to get up there where you need to worry, is there a potential for a dividend cut or even a dividend pause perhaps? Dropping down, I want to look at free cash flow. I like growing free cash flow over time. Typically, if a company has growing free cash flow, they're doing several things with that. They're paying down debt. They're making acquisitions. They reinvest back into the company. They can buy back shares, or they can raise your dividend, right? And I want all of those to happen if possible. Going back to December 2021, you can see here $5.7 billion in free cash flow. December 2022 down to 4.2 billion. December 2023 down again to 3.4. Trailing 12 months looks like it's down again at 1.5 billion. We'll have to see what the rest of December shakes out because we're still recording a month of last year's number with this trailing 12 months. But that is exactly the opposite of what you want to see actually with free cash flow. You would rather see this way going up over time. This does not look good. This is something to definitely keep an eye on, and that's probably part of the reason that the payout ratio is creeping up. Repurchase of capital shares. Now they are pulling shares out of the market. 2021 here, you can see 463 million of shares pulled out. December 2022, another 420 million in that year. December 2023, they reported out a total of 211 million, and then in the trailing 12 months, it looks like another 117 million. Though again, we'll have to see what it shakes out for December because part of the trailing 12 months is the last month of 2023. Now, like I mentioned, I always recommend more than one source. StockAnalysis.com is another one I look at. I'm not affiliated with Yahoo Finance or StockAnalysis.com. I just do look at more than one source to make sure the information I'm getting is accurate and up to date. And I suggest you do the same. 2, if not 3 sources. As you saw, Yahoo Finance had a lot of missing information that I was only able to even look up by looking at a second source, in this case, StockAnalysis.com. Now, 12 analysts have taken a look at this. They do call it a consensus hold. They have a low estimate of $85. That would represent an 11.7% increase from where it currently sits. And all of their estimates are actually currently lower than where it currently, or all higher than where it currently sits. They're all above this 76.17. Average estimate is $97.58. That would represent a 28.23% increase. High estimate of $112. That would represent a 47.17% increase. All the while, you could collect that 7% plus dividend yield so long as they didn't cut the dividend. If they paused it, that wouldn't be as big of a deal if they cut the dividend. But at 78%, they're not, technically in danger. So they could stop buying back shares, for example, and still pay out the dividend, maybe even raise it a little bit. But it gets much higher than that. We should start to have a little bit of concern here. Statistics. I like to get into statistics, look at return on equity and return on invested capital. I like 10% or better for both of that metrics, and it tells me how well the company is reinvesting money back into the company, whether that's making acquisitions, buying out making acquisitions and buying out other companies, buying back shares, things like that, improving the product lines, those sort of things, redoing a factory if they have factories, that sort of building a new one like we read in their history there. those sort of things. What are they getting for that return on invested capital, that return on equity? Return on equity ROE is above the 10%. I like at 15.86%. Return on invested capital at 7.12% is a little lower than I'd like to see. Earnings per share growth, I like 5% or better projected over the next 5 years. They're sitting at 11.21, so that's very good, above the 5%, over twice what I'm looking for there. Revenue growth, though, I don't like the negative revenue growth, actually being negative. I want to see growing revenue, but probably part of the reason that their free cash flow is decreasing is because of this decreasing revenue. Now, I am long Lyondell Basell. I do have a position here, 122.68592 shares. I am down 13.9%. I have $10,809 into the position. I currently would, if I was to sell out of the position, I'd be sitting on $9,344.99. So again, a loss of $1,464.02. I don't think I'm selling. You'd never say never. If I go look at the financials maybe this weekend, it might tell me a different story, but I have not looked at the financials, so we'll see how this one shakes out. Quarterly payout ratio, they're saying 81%. Either way, it's over 75%. It's over what I'd like them to be. We are seeing dividend growth still at 6.68%, high single digits. Buyback yield is negative, and shareholder yield is positive at 6.82%. They do pay out on the March, June, September, December timeframe like most companies do. This 2022 was a special dividend at $6.39 per share. I loved receiving it. It was very nice, but that is not a typical dividend. This is their typical dividend. August 2022, it was $1.19. They raised it up May 2023 to $1.25. They raised it up again in June of 2024 here to $1.34, and I would anticipate if they're going to maintain the dividend growth, they will do it either around that April or May, June timeframe of next year. Now, what does the screener say? Understand the business. That's where we started. They get a check there. Growing free cash flow, no. Growing dividend, yes, they still get a check there at 6.69%, though their dividend is above that payout ratio of 75% or less, so no check there, and we need to keep an eye on that. Dividend yield theory says they're potentially undervalued. Check there. Buy below current cost basis. It is right up against their 52-week low. Check there. Return on invested capital was a little lower than I like. Return on equity was good, but it's got to be both to get the check, so no check there. Earnings per share growth was at 11%, so that's over the 5% we're looking for. Check there. So we're looking at 1, 2, 3, 4, 5. This not only would make it onto my watch list, I'm not very concerned with Lyondell Basell. I do want to look at their financials just because they have dropped down a little bit. I want to see what's going on there, and the growing free cash flow decreasing over the last several years does have me a bit concerned, just the way that's steadily decreasing. I want to look a little bit more into their financials, but for me, it would make it onto my watch list, and it is in my portfolio. I may add a little bit here. If the financials all look good, I'll probably add a little bit over the next couple weeks, so long as it stays under my cost basis. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the videos. Let me know what you think of Lyondell Basell. Is it in your portfolio? Is it one you're watching? Is it one you're selling? Maybe you're part of the downward pressure and the reason the stock's dropping down to 52-week lows, and that happens. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company stock you'd like us to take a look at, drop it in the comment section. I'll work it into rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing in journal for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.